Welcome to Common Sense Investing. My name is Cameron, and today I'm going to introduce you to one stock on the stock market in 10 minutes or less. It has a growing fan base of investors who love everything that this company does, but when you get a popular stock with a passionate shareholder base, you also get some people pretty passionate to talk about the warning signs that the fan club is not talking about. However, I'm here today because I do know some very intelligent investors that I respect who have really deep dive researched this stock and have said, Cameron, it does have the potential to 10x from here. I don't know. That's not my job today. I've not spent 10,000 hours researching the massive potential of this company. I've also not spent 10,000 hours going down the rabbit hole of each possible risk. My job today is to simply introduce you to this stock and let you make the decision as to whether you want to continue researching it. So with that being said, it's my absolute pleasure to introduce to you today Hydreight Technologies, trading on the TSX Venture in Canada under the ticker NURS, and on the OTCQB under the ticker right here, HYDTF. This is an $88 million market cap company with some cash, no real debt, 45 million shares, up 476% in the past year, still somehow down 35% from their 52-week highs. They recently just completed their Q1 2025 earnings, a top-line revenue of $6.53 million, 34% increase year after year, just starting that journey into profitability with a GAAP net income of $21,000 and approximately 65% growth in new nurse sign-up. What does that mean? For medical professionals, Hydreight bridges the gap between patients and healthcare professionals. Explore how you can make a difference in your community with the perks of being your own boss. And then for everyone else, for the public, Hydreight and our medical providers will come to you no matter where you are. If you want a service at home, in your hotel, or by the pool, we can do it. While this doesn't sound like much, it's actually a brilliant idea. They call themselves Uber for nurses, and I think that's a great comparison. Before Uber, you couldn't just put a sign on your car, drive people around, and get paid. There were massive regulatory hurdles, including pesky things like insurance, lawsuits from both legal and illegal competition. Uber solved all that. At least mostly. They crushed the taxi mafia. Now the joke is all you need to make money driving is a first name and a heartbeat. It's very easy to go from absolutely nothing to having a small business driving for Uber. Hydreight is attempting the same thing, just with complex medical stuff. Right? The example used on this slide is that I could book a drip hydration appointment in my home with just a quick phone call. This slide alone has tons of information talking about their diversified revenue streams, their core business of their annual subscription, where they offer a package of $5,200 for nurses to join up onto the platform and start providing services. Remember at the start of this video when they signed up 65,000 nurses. They offer Hydreight service sales, Hydreight pharmacy sales. They have some white label technologies. And then recently what investors have been getting excited about is VSDH One Virtual, an all-in-one solution for launching direct consumer healthcare brands, basically the Amazon of drugs. Right? This is a plug-and-play white label solution for health and wellness companies that want to offer medical services online. This could include things like GLP-1 treatments for weight loss, peptides and hormone therapy like testosterone replacement, sexual health and hair loss products. Whatever prescription you think you need and need it quickly, you can usually get it online through Hydreight's new platform. How they make money through all this? Well, again, subscription fees. Nurses pay $5,200 to sign up for the platform, $3,000 per year, and they have financing. They're going to get some margins from pharmaceutical sales, and then they have the service revenue share, where Hydreight collects a 10% margin from each service performed through the platform. And the potential on these revenue verticals are huge. I mean, talking here about numbers that are, you can't even consider them as a microcap stock. I mean, when you're a tiny little company making millions of dollars per year and you're talking about a total addressable market of 340 billion, 33 billion, 11% growth. I mean, if Hydreight is successful, basically the sky is the limit, and that is part of what has people excited. And really, I'm going to point you in two different directions to some research that is not on my platform. Right here is Liger Club on X. This is ByronStreetResearch.com. And recently, on May 22nd, 2025, Byron Street produced a very good research paper on Hydreight Technologies, talking about a price target here of $6 Canadian. You could see here that Byron Street, if Hydreight is successful, has their full year 2024 revenues at $16 million, their full year 2025 expected revenues at $170 million for nearly 1,000% growth over the next 12 months. Full year 2026 expected revenues of $613 million, and then $752 million in 2027. Massive, extreme growth is what is projected if Hydreight's revenue verticals can hit. If they can succeed, people expect this thing to grow very quickly. And while some people might laugh and not take that type of revenue growth seriously, it has been done before, even with companies on my channel. This is Hydreight Technologies, who in 2017 had $400,000 of revenue, $10 million in 2018, starting to look like Hydreight here. And then by 2024, Hydreight Technologies is now producing $919 million of revenue. And the potential, if these numbers actually execute, the potential is absolutely stunningly high. However, there's always two sides to every story, and let's take a look at some of the risks from a fantastic new investor and researcher, MVC Investing. MVC Investing put together a Substack article that's free for anybody to read recently here, talking about some of the most relevant risks of Hydreight. There's 4 listed right here. I will tell you right now that very eloquently, professionally, and well written, he lists out 11 different risks for Hydreight Technologies. I mean, this is absolutely stunning work and just lays out, yes, while the potential is significantly high if the company executes, there is severe concern that that might not happen. So this is a fantastic comparison, and I will link to both of these articles down below in the pinned comment for you to go read them after this video, where Byron Street Research talks about the massive potential of Hydreight. If the revenue verticals succeed, if the company executes, basically the sky is the limit for this company with massive underserviced total addressable markets. This company could be making shareholders money. At the same time, MVC Investing points out that Hydreight has more risks than a Chinese shipping company during a Trump presidency, right? There is a long list of baggage being carried around by Hydreight, and there is a chance that they don't succeed, right? So that contrast, the differing of opinions, being able to go read both perspectives and make up your own mind as an investor is something I highly value. And if you would like to continue researching and discussing Hydreight Technologies and some other fantastic microcap stocks, commonsenseinvesting.ca will introduce you to my Patreon and my Substack. My name is Cameron. You've been watching Common Sense Investing. As always, thank you for your time. Good luck investing out there.